Germany's leading economic institutes have revised the country's growth this year down to basically near stagnation.
Germany, a nation long synonymous with economic stability, precision manufacturing, and industrial prowess, now finds itself on the edge of a crisis that no one predicted.
Growth has stalled, there's a big hole in the public budget, and some of the country's most iconic companies are cutting jobs.
Once a global leader in innovation and exports, Germany is experiencing a significant economic slowdown, one that experts say is worse than anyone expected. Today we'll explore the factors driving Germany's economic collapse, delve into the industries that once fueled its rise, and examine how deep the country's challenges run as we approach 2024.
High interest rates, weak global demand, and political uncertainty have disappointed hopes for a stronger recovery.
Act 1. A troubled economy. At the start of 2024, Germany's economic forecast is grim. With growth stagnating and several key industries underperforming, the country is facing a significant downturn. For a country that once saw itself as the industrial powerhouse of Europe, the current state of affairs is deeply troubling. Germany's gross domestic product, GDP, is expected to show little to no growth in 2024. What was once a forecast of moderate recovery has turned into a prolonged slump. One of the key factors contributing to this stagnation is the continuous decline in industrial output, particularly in manufacturing, Germany's traditional strength. Act 2. The decline of key industries. Let's take a closer look at the industries that have historically driven Germany's economic engine, starting with its automotive sector. Germany's automotive industry is one of the world's largest and most successful, with global giants like Volkswagen, BMW, and Mercedes-Benz leading the charge. But today, the industry is struggling. The transition to electric vehicles, EVs, has proven more challenging than expected. Traditional manufacturers, who once dominated the internal combustion engine market, now find themselves scrambling to adapt to new technologies. The shift to electric cars requires huge investments in new infrastructure, supply chains, and manufacturing processes, changes that have come with significant growing pains. But the issues don't end there. A chip shortage that began in 2021 continues to plague the automotive sector, crippling production and leading to delays in vehicle deliveries. This supply chain bottleneck, combined with high energy costs, has significantly hindered the industry's recovery. As a result, production has been stunted, sales are down, and major manufacturers are struggling to remain competitive on the global stage. Act 3. The energy crisis, a deepening strain. At the heart of Germany's current economic woes lies its energy crisis. The decision to phase out nuclear power, combined with rising energy prices exacerbated by the war in Ukraine, has left Germany heavily reliant on natural gas imports. As one of Europe's largest energy consumers, the country is feeling the strain. Energy costs have skyrocketed, especially for industries that rely on large amounts of electricity, such as chemicals and steel production. Despite efforts to transition to renewable energy, the infrastructure to support such a massive shift is still in its infancy, leaving the country vulnerable to energy shortages and price volatility. While the government has made strides in promoting green energy initiatives, including the expansion of wind and solar power, it is clear that this transition is not happening fast enough to meet the country's immediate needs. In the meantime, high energy prices have forced several industries to scale back or relocate operations to countries with more affordable energy options. This migration of business activity is slowly eroding Germany's industrial base. Act 4. Labor shortages and demographic shifts. Another major issue contributing to Germany's economic crisis is its labor shortage. As one of Europe's largest economies, Germany has long relied on its well-educated and skilled workforce. However, the country is experiencing a significant demographic shift, with the working-age population shrinking. An aging population, coupled with a low birth rate, is placing additional strain on Germany's labor market. This shortage of skilled labor has been particularly felt in the manufacturing and tech sectors, where companies have struggled to fill positions despite offering higher wages and improved working conditions. Automation and AI technologies are being increasingly explored as potential solutions, but these can only go so far in replacing the hands-on work required in industries like automotive manufacturing and heavy machinery production. Moreover, this labor gap is further exacerbated by immigration policies. While the government has attempted to attract talent from outside the EU, bureaucratic hurdles and language barriers have made it difficult to recruit skilled workers at the scale needed.
Act 5. The declining competitiveness on the global stage. Germany has long been known for its ability to compete globally, but this competitive edge is now under threat. The country's manufacturing sector is struggling with high labor costs, outdated infrastructure, and a complex regulatory environment that makes it difficult to remain competitive against countries with lower production costs. In particular, Germany's manufacturing exports, which have long been a driving force behind its economy, have come under pressure. Germany's market share in key export sectors has steadily declined as countries in Asia and Eastern Europe offer cheaper alternatives. At the same time, global trade disruptions, driven by the pandemic and geopolitical tensions, have made it harder for German companies to access new markets. One key indicator of this decline is the performance of German exports. Despite efforts to increase trade with emerging markets, Germany's export growth is projected to remain sluggish in 2024. This weak export performance is coupled with a decline in domestic investment, leading to a persistent economic downward spiral. Act 6. Inflation and consumer behavior. Another critical issue for Germany is inflation, which has been a concern for the country since the pandemic. Although inflation rates have come down slightly in 2024, the cost of living remains high, and consumer spending has stagnated. Real wages are rising, but not at the pace needed to offset the increasing costs of everyday goods. As a result, consumer confidence is low, and Germans are increasingly opting to save rather than spend. The savings rate has surged to 1.3% higher than the average seen in the years prior to the pandemic. This reluctance to spend has further dampened economic growth, as consumer demand, a critical driver of any economy, remains weak. In a climate of economic uncertainty, German households are hoarding savings rather than fueling consumption. This shift in consumer behavior, while understandable, is a significant blow to the domestic market, particularly for industries like retail and hospitality, which rely on strong consumer demand to thrive. Act 7. A long road to recovery. Germany is facing a crossroads in 2024. While there are attempts to implement reforms aimed at modernizing infrastructure, reducing bureaucracy, and encouraging more investment in technology and green energy, these efforts are likely to take years to bear fruit. The energy crisis remains a central issue, and without a major shift in how energy is produced and consumed, Germany's industrial sectors will continue to face stiff competition from other nations. The demographic shift, combined with a lagging labor market and the ongoing global economic instability, leaves little hope for a quick recovery. As global trade continues to evolve, Germany must find ways to adapt to a changing world in which it can no longer rely solely on the industries of the past. It must innovate and diversify its economy while facing challenges of automation, climate change, and the need to remain competitive on the world stage. Conclusion: Germany's economic collapse, though not entirely unexpected, has surpassed all forecasts in severity. The issues facing the country are profound and multifaceted, with structural weaknesses in its key industries, rising energy costs, demographic shifts, and a global economic environment that no longer favors its strengths. If Germany is to emerge from this crisis, it will require bold reforms, rapid adaptation, and a concerted effort to address both the short-term pain and long-term challenges ahead. As we move into 2024, one thing is certain: the road to recovery will be long and difficult, and the world will be watching closely to see how Germany navigates this unprecedented economic downturn.